Good evening, everyone. Hope you had a nice weekend. So this is Chart Sniper again with the weekend indices and futures analysis, and this weekend analysis is for the upcoming month, which is the first week of October, from 4th to 8th. So we had a rough couple of last couple of weeks for the markets, and even in the last week, I was mentioning to be cautious about a fake rally and the possibility of a potential pullback. So let's get quickly started and look at how this week is going to be. It's going to be a short, brief preview of how they're doing. Okay, so let's get it started. First, let's start with ES S&P futures. Uh, so So let's start with ES. The one thing that I see here is towards the close on Friday, we had a nice bounce in ES, and so what is keen to observe is while ES made a lower low on daily, the RSI is showing some divergence of relative strength. It made a higher high. So that is a good bullish pattern formation there. Relatively very nice RSI strength there. So likely we can see a pop back at least until the middle Bollinger Band resistance on daily in ES, provided there is enough buying pressure. So most likely it will happen. Um, but we need to be careful. Why we need to be careful? Because as today you can see that there are 14 points up, and as it is trying to regain the 5 days and 8 days averages on daily, we can see that it is just hovering below the middle Bollinger Band on weekly. So how well it could reclaim that middle Bollinger Band, which is currently I think at around 4364. Uh, Determines what's going to happen in the next week. So clearly, it has made a very, very big down move in the last week, and all that down move can be retested this week also. One possibility is it regains that middle Bollinger Band and it goes all the way to this 4400-ish before any pullback happens. That is one possibility. If 4400-ish on weekly turns out to be very close to the middle Bollinger Band on daily. So we have to see how it goes. Again, we are in the, I am in the wait and watch mode. I'm not taking any directional bet on this one. But because of the relative RSI performance, I'm hoping that it will start gaining some momentum and revisit some of the resistance levels before it decides whether to kind of roll over and pull back or rally higher. So waiting and watching and letting it prove its strength by moving above certain critical averages is very good. And so now that it is trying to find some support on the 100 days average, if it finds support, obviously it is going to retest this 20 days average or the 50 days average at the cloud top. So that will be the levels, the range to watch for a bounce play. If not, we have the previous week's range that it can pull back to. We have a lower Bollinger Band support at 4289. Okay, so with that in mind, weekly is getting into a consolidatory mode, and no matter what drama it does, maybe it bounces and then pulls back, the range will slowly get lower and lower, and we expect to see some kind of further consolidation, probably until October 15th monthly options expiration. So yeah, you can start nibbling some of the directional bets or neutral trades, uh, but be careful in going directionally bullish at this moment until unless it proves its strength by regaining certain averages. Okay. So that is about ES, and let's get on to Nasdaq. So Nasdaq also pulled all the way back to 100 days average. It bounced off of the cloud bottom, and while S&P showed some relative strength or divergence, RSI divergence there, Nasdaq actually aligns the RSI move, making a lower low, aligns with the price also making a lower low. So there is not that great bullish divergence here. We could certainly see that it can regain and meet this moving average convergence around 15 190-ish before it decides whether to pull back or continue rallying. So as of now, it is exactly at the middle Bollinger Band, so it's not out of the woods yet, which means it's actually directionless. And last few times it touched the actually, like I think from significant from March 2020 onwards, I think every time it touched the weekly middle Bollinger Band, it either consolidated there for a few weeks and bounced back. We hope that will happen. If not, we are looking at a decent pullback of all the way to 13,700-ish to the lower Bollinger Band, and that would be a pullback of 7.5%. Okay, so now if you ask me, because it is below the 5 and 8 moving averages, a bounce back to that level is a sell zone. So what it means is there is an upside potential of 1.5%, and there is a downside potential of around 7.5%. So that shows you how carefully you should be on the long side. So give it some time, be patient in trying to buy the dip. Once it regains these averages on some strength and it moves above the last week, we will have decent close to 3% or 2% safe range that we could make some money on rather than trying to make this a risky bet. Okay, again, these are for swing traders, but if you are scalping and day trading, it can do this bounce to these levels and make a decision at that time. So we don't need to predict in which direction it goes. That never should be the goal of a good trader. The trader knows some levels. If it kind of starts moving to upside, these are my levels, resistance levels. If it starts moving downside, these are my support levels. So that's how a good trader should look like, should plan his trades. You should not have any directional bias as such. Okay. So moving on to Nasdaq, from Nasdaq to Dow Jones. It was relatively weak. It's still below the cloud on daily, and it was supported by 200 days average. Yeah, it looks relatively weak among all the four major indices. So if it has to show some strength. Okay, so RSI confirms a stronger relative divergence there, bullish relative divergence. So hopefully there will be some upside move left for this one to bounce and join the other indices. And when we go to and see Russell, it has been strong relatively in a short-term basis, but on a long-term basis, it has been in a range-bound consolidation. And as you could see here, RSI is making a higher lows pattern, and it has some move. It is actually above the middle Bollinger Band, above the cloud, and it can make a quick up move to that area. Okay, so the next expiration that we have is October 15th. It all depends on how these 2 weeks play out. If these 2 weeks are bearish, like the market pulls back to all the way to 200 days average, or on a weekly basis to 50 weeks average, then you can certainly expect a bounce in the last 2 weeks of October into the year end. But if you see a bounce starting from here, then October end is kind of probably it might do one more pullback before the year end rallies. Okay, so we are getting trying to get the inflation kicking in, and also there will be some Fed tapering news coming in, so that might influence the market. So yeah, so let's take it a cautious step, and try to be neutral when the market is really neutral. As you saw, everything is right at the middle Bollinger Band or 20 weeks average, all the indices. So that shows that there is no clear direction either to upside or downside. So when the market doesn't have a direction, don't try to make some directional bets. Okay. So one nice thing is SKEW kind of is pulling back, and it is around 135 area. So from overbought, it's kind of coming into some decent levels. What it means is they are not expecting much volatility, or more than two standard deviations move into future. So that is good. I would like to it to see below 135 and stay there for some time. That helps the market to do a slow grind higher. Actually, that is the usual thing that the market do, slow grind higher. And the fact that this is coming down from elevated levels means people are big players who are trying to buy future dated contracts. They are not expecting a big crash or something like that. It's not, the concern has certainly reduced from the previous inflated levels, so that is a good thing. VIX, when we quickly look at it, as we were mentioning last time, it can do a quick pop to the 100 weeks average, and that's what it did. It gave up everything the week before, and yeah, last week it kind of did that, but the bounce this time is not as strong as the week before. So overall, as you could see, it is slowly and steadily hovering above the 20 weeks average. What it means is it is preferring to stay higher above 17.5-ish. So 17.5 20 range is a caution zone. It's not crash market crash zone. So as long as it stays above that, we should be a little bit cautious in what directions it could go. So we're seeing those pops, and then a lot of give up is happening there. So I would prefer for the VIX to lose that 17.5 level and come back to this 15 ranges, which helps us the market move in a slow grind higher upward fashion. So until it, as long as it is staying above 17.5, I would like to be cautious playing a directional bet on the market, especially to the upside. Okay. So let's see how VIX behaves around this 17.5 range, whether it moves down and gives the market a chance to do slow grind higher or not. Okay, so that's at a nutshell. Overall, no direction in the markets, and I don't want you to get into directional mode also. So play cautious there. Just show some a little bit more patience until it picks a direction. So a quick overview of the Bitcoin. So very decent bounce from the cloud, and from the 38.2 retracements, and this could certainly be forming um, a range sideways consolidation between this 42827 level and 51493 level. So what we could expect to see is either it can consolidate further like a bull flag. Come on. So like that kind of bull flag formation, for a few more weeks in this range, or maybe it can quickly go here and make a pullback to the cloud and then go higher from there. So it is staying above the 50% retracement and very close to 61.8 retracement. So far it looks constructive. We have some room all the way now on the weekly level, if it kind of does that breakout move. So we have more room all the way to 54,000, and yeah, that would be a decent level, which is almost going back close to the previous recent highs. And if it can make a higher high, that would be very, very constructive for Bitcoin. On weekly, it looks very nice, constructive chart, supported by the cloud, couple of weeks, and now it's kind of chugging along. So we just need to see if it can form a flag formation here by making a lower high and return, and then pull back a little bit and then go higher, or it can directly go all the way to this level and start moving higher also. So we have to wait and see. If you are long, you can stay long. There is no need to. There is no worry. There is no need for panic here, especially with Bitcoin. I was hearing some very good news about Ethereum. So a lot of people are preferring Ethereum contracts, future contracts than Bitcoin. So there might be some scope for a bounce there. So Ethereum has a clear pattern developing on weekly. This is going to be a nice cup and handle is forming. So we could clearly see a revisit of this downtrend line formed, and to the 4,039.50 area on, as long as it stays above this 61.8 retracements. So you could see that move happening before further decision is made. Okay, but this looks very constructive on weekly, and that gap up so far shows some strength. So we have to really see if it gets going upside, or it tries to fill that gap and then goes upside. Okay, but overall, um, these two, Bitcoin and Ethereum, that we have been looking from the past few weeks, is looking very constructive here. Okay, with that, be careful. Try to kind of find some strength in the market. You should try to find some stocks that are showing relative strength, and try to stick to them. So one stock that I have been looking at is Datadog. So while the market has been moving lower, it was showing some relative strength, a nice increasing volume of buying. It's still below the average volume, but it's very constructive move when the market was going down. So now that it has cleared, it has room to go back to all-time high. It has held very well in the last few weeks when the market was weak. So these are some kind of stocks that you could take some risk to the upside. Okay, Live Nation had a very decent move. This is one of the trade that we were following. See that strength, it broke above those two trend, that resistance line, and it hit another resistance line here. So we got the move what we wanted, at least the mid of the range. 100 was the first target, with 110 as the next target. So we are in the middle. We reached the first target, so I took some off there. So let's see if it can go through to the next target of 110, or pull back, retest these levels before it goes. Okay. So trying to find some stocks with a good relative strength is recommended here. And once we have, let me see. So you can actually go to the market watch and try to find some stocks that have been green on red days. So you need to kind of capture that. Netflix has been doing good. So it kind of revisiting those levels that it had before. It had been strong for the last 2 days. If it makes a new high, if it breaks out to new high from this consolidation there, we will be looking at it reaching the 650 levels. Okay, but there is no guarantee that it will make a new high. So it's better to kind of book some profit if you're already in profit. So that's what I did. I closed some of a call spread that I had in Netflix here before to wait and see how what it does. If it continues to rally, good for people who are long. But yeah, it is showing some nice strength with the recent volume. Earnings is on October 19th, so which is in a couple of weeks. So maybe they will try to take it to that 650 level in the next week or so and pull back into the earnings. Okay. So, but we're looking at a strong resistance from 640 to 650 level in Netflix. Okay. So those are some stocks that are good. Better to stick to indices if you are not good at picking some stocks. You can play index itself until it regains certain critical moving averages. Uh, then you can go and move to some stocks of your favorite. Okay. So with that, let's wrap this weekend analysis. So we had these markets indices have to prove its direction. So I am neutral to mildly bullish into next week. Okay. Thank you very much for tuning in. Stay green for the next week.